Ladies and gentlemen, welcome back to the channel. We need to get into what in the world is going on lately with AMC Stock, what you need to know heading into this trading week. Go over all of the data in regards to a short squeeze, get you guys just roundly and squarely caught up to speed with what is happening this week. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Now let's go ahead and jump straight into it. So first things first, not a lot of specific AMC stock news. There's really none that is coming across the wire. There's none coming across mainstream media. Not a whole lot to actually report to you. Now, this week is going to be Thanksgiving week. Now, Thanksgiving is on, let's see, November 23rd, a Thursday right here. Stocks will be closed. So this is a shorter trading week. And then your bond market will be closed the day after Thanksgiving. So that's going to make the day after Thanksgiving a little bit harder to read, just because the markets have been trading so much lately based on what bond yields have been doing. So it makes this week a little bit more on the strange side. Just call it that one. We do have some economic data that will also be coming out this week, in which we'll get into right now before we get into all of your data specifically with AMC. Now, pull this up for yourself. Trading Economics, tradingeconomics.com/calendar. Pull this up on your mobile phone. Pull this up on your tablet, on your computer. I think it actually is really good on the phone too. I personally use it when I'm out and about and I see the markets like moving crazy or you know, doing a weird movement. I'll look and see, hey, was there a bond auction? Hey, was there a Fed speaker that just started speaking, or what's going on? So keep that in mind. Now, some catalysts that we're going to have this week are your bond auctions. Now, your bond auctions, as of recently, have given the markets big moves. Like, your bond auctions have been like huge catalyst, like a major data report that's coming out. Now, on Monday at 1 p.m., you're going to get your 20-year bond auction. So if you have bad demand, then the yields are going to rise. If you have good demand and a lot of people come to buy the bonds, well, yields are going to fall. And that's important, especially with your 10, 20, and 30-year treasuries. To a lesser extent, your 5-year treasuries, but those can still be important as well. And that's basically it for Monday. For Tuesday, Canadian inflation rate year over year going to come out at 8:30 in the morning. Not expected to be a big catalyst. 8:30 in the morning as well, you're going to get the Chicago Fed National Activity Index for October, the Red Book year over year, existing home sales for October, existing home sales month over month for October coming out at 10 o'clock in the morning, and then the FOMC minutes at 2 p.m. on Tuesday. That will be a semi-big catalyst. The FOMC minutes are a little bit on the stranger side because it's not like a CPI report. It's not like a big data point in particular. It doesn't tend to cause a multi-day movement for like the entire markets, right? But it can cause like intraday volatility. But it usually doesn't cause a big movement just because it is it is backwards looking. It's basically like the transcript or the readout of the last Fed meeting. So sometimes you can get new information, but a lot of the time it's just a transcript, the same old, unless the Fed wants to add something in there that is different, which most of the time they don't. Now, for Wednesday, you're going to have your biggest catalyst. That is at 8:30 in the morning. You're going to get durable goods orders month over month for October. You're expecting negative 3.2%. The key here is too negative is bad. Little negative is good. Meaning, if the economy is just slowing, that's fine. If the economy is heading into a recession, that's a problem. Now, my personal prediction is negative around 2.5%. We'll ultimately see what happens, what these numbers come out as. It's one of those things where it's going to be very, very hard to tell exactly until we do get the data report. I think around 2.5% is negative is pretty reasonable for durable goods orders overall. And then initial jobless claims, we did see a spike last week to 231,000. And this week, we're expecting 225,000 initial jobless claims. So watch to see if you do see a spike there. That's obviously not going to be the greatest. And then Michigan consumer sentiment for November, your final numbers will be coming out as well. And then more bond auctions on Wednesday. Thursday, markets are closed, but you are going to get the inflation rate year over year and month over month coming out of Japan. Your month over month number is expected at 0.4% positive. And this can be important because Japan is the largest holder of foreign. See right here, Japan owns about 1.1 trillion worth of U.S. treasuries. China 821.8 billion. Japan is starting to see quite a bit of inflation. Like I said, the month-over-month number for Japan inflation is expected at 0.4%. If there is more pressure, which this looks like there is, for Japan to actually start raising rates at least a little bit, well, that is going to not be the greatest thing for markets, right? Especially our markets and our bond market. If there is selling of treasuries, that's obviously going to push up yields, not exactly be the greatest thing out there. But we will be closed for trading on Thursday, so markets might react to that on Friday. We'll have to wait and see. But bond markets are closed on Friday. So that's where the end of this week gets way trickier than the beginning of this week in general. Now, on Friday, you are going to get S&P Global Composite PMI Flash for November, an S&P Global Manufacturing PMI Flash for November, and S&P Global Services PMI Flash for November. Not expecting that's going to be a huge catalyst, but considering Friday's pretty dry overall, that could be one of the bigger things. Overall, durable goods orders is the big question. Do we see too much of a slowdown in the consumer and durable goods orders, or do we see just enough to cause some slowdowns out there for the economy that doesn't necessarily push us into a recession? That's a big question that we do need to see answered, that we just don't have answers of right now. So that makes it a little bit difficult, trying to see and forecast what's going to happen next for AMC stock. Now, let's get into some of the data here for AMC over on Ortex. Keep in mind, take this data with a big grain of salt. I don't think these numbers are accurate in the slightest bit, but again, we'll just have to wait and see. You have a short interest percentage of free float at 9.78%. I just clicked off of it on accident. 9.78%, $143 million worth of short positions. Days to cover 0.84, 19.34 million shares that are currently sold short. Shares out on loan 18.32 million. Cost to borrow 1.31%, and utilization of 42.24%, and a short score of 58.86 out of 100. You have cost to borrow average of 1.71%, cost to borrow minimum 0.77%, cost to borrow max 8.6%. If you take a look at the option activity on Friday, you had two orders totaling $177,000 with a positive order value of 100%. And calls, let's see for this week ahead. On the call side, open interest of 61.5%. Open interest on the put side of 38.5%. Volume 58% to the call side and 42% volume to the put side. So some activity overall here. Put to call ratio, open interest of 0.63. So about 2-to-1 for this upcoming week for calls compared to puts. Now, if you look at the Stocko tracker data, let's go ahead and see here for this upcoming week. You have 2,075 calls currently in the money, 45,295 calls that are out the money, 18,000 puts in the money, and 11,510 puts that are out of the money. So again, another week kind of like what we seen last week, where there is a lot of dry powder, if you will, on the sidelines for a potential gamma squeeze. I do think that is a potential if some of this data comes in okay. And just overall, guys, the 10-year treasury yield is really what stocks are reacting to as of lately. And your 10-year treasury yields have fallen a lot, right? From 5% to 4.44% or 4.39%. So I still think there is more capital on the sideline that is still being deployed into our markets as these treasuries have been falling. Keep in mind, you are a retail investor. You can sell your positions. You can buy stocks pretty easily. these big money investors need to be cradled like a baby before they make big choices and big decisions and, essentially reposition their portfolios. A lot of that happens on a quarterly basis or even a monthly basis. So it's going to take some time for, Wall Street to fully position into stocks that are interest rate sensitive, that will benefit from rates going lower, things of that nature. So it's just not certain yet that, you're going to see or when you're going to see all of that positioning actually happen. It could be towards the end of this year. It could be in 2024. It could be right now. It's really, really hard to tell, but I do think bond yields have fallen a lot on your long duration treasuries, 10, 20, 30-year treasuries, that will continue to have a positive effect on our markets. At the very least, will be somewhat supportive from here. Now, you're also going to get NVIDIA earnings. NVIDIA earnings will be Tuesday and after hours. Now, NVIDIA is an interesting one because I'm not expecting anything that is too negative, right? NVIDIA, the last two earnings have massively beat expectations, risen or raised guidance, and the stock has done well, right? It's done very well. But it's at that moment in time where it's kind of like to the downside. When a stock just has bad earnings after bad earnings after bad earnings, to some degree, markets start to say, hey, is this the worst it's going to get? Same thing to the contrary. With NVIDIA earnings being so good, investors are going to start to say, hey, is this the best it's going to get? Is it going to get worse from here? So even I'm expecting NVIDIA is going to beat on all their numbers and probably raise guidance again big time. Wouldn't surprise me. Investors are going to say, hey, maybe this is the end of the kind of crazy growth we've seen with NVIDIA. And it wouldn't surprise me if the stock's down 5% or so. But it's important to know that I don't think the markets are trading nearly as much on AI as they were over the summertime. Now the markets are trading on lower yield. So I don't even think if NVIDIA had bad numbers or like okay, decent numbers, but not spectacular numbers, that it would even matter if the stock dropped 10, 15, 20%. Sure, it might put some pressure on stocks, but it's not going to derail this rally like it certainly would have over the summertime. That's just my personal opinion. We'll have to wait and see. I do not have a trade on NVIDIA yet, but if I make one, if you guys want to see it, link down below in the description of this video. Nonetheless, you are going to have some other earnings as well. Zoom Monday after hours, Trip.com, Agilent Technologies, I don't know if I'm saying that right. Tuesday pre-market, Kohl's, Medtronic, Lowe's, Best Buy, Abercrombie & Fitch, Dick's Sporting Goods, Burlington, American Eagle, Analog Devices, and then Tuesday, like I said, NVIDIA, HP, Autodesk, D-Local, Nordstrom, Jack in the Box, Urban Outfitters, T-Docs, Emeren, and Guess. And then Wednesday pre-market, you're going to have John Deere, and then Futu on Thursday. So an interesting week as far as earnings themselves, but again, NVIDIA is your big one. Retailers, well, they're going to tell us how the consumer is really doing. So it's going to be an interesting week, that's for sure. NVIDIA is going to be a big one. Now, here in the next video, we're going to get into a price prediction this week for AMC stock, what I'm expecting out of the stock this week. So stay tuned to the channel for that one. In the meantime, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.